5 years ago, I abandoned my dream of becoming a dentist and went all in on trading. Since then, I've made thousands of dollars in the markets and helped countless others do the same. Now, today, I'll be giving you the blueprint that will take you from blowing accounts and unprofitable to making so much money you'll be calling your boss up and telling them to kick rocks. I quit. All right. So there are 5 stages to every trader's development. The first one is losing a lot. Okay. Everyone's been through this. We all get in the markets. We think we know everything, and boom, you're hit with a reality check and you're losing a lot. You're losing a lot of money, losing a lot of trades, whatever, right? Losing a lot is the first stage. The second stage, losing a little, right? So you go from losing a lot to losing a little, and you're not making money, right? You're still losing majority of your trades. You might win some, but you're still losing. Then you get to the break-even stage. And that's when you're not winning, you're not literally losing long term, right? You're just kind of flatlined and you're kind of plateaued in your performance. You're not making any money. You're not really losing any money either. The fourth stage, making a little bit. So you go from losing a lot, losing a little, to break even, to making a little bit of money, right? Now you're making some progress, some real tangible progress. You're not losing like you were, but you're also not making big money yet. You're not making buck you money, right? So that's where this comes in, the last stage, making a lot of money. Tell your boss to fuck off and you can quit your job and you can trade full time, right? That's what most people's goal is, to trade full time. So there are 5 stages to every trader's development. Losing a lot, losing a little, breaking even, making a little, making a lot. Today's video, I'll be taking you through each level and how you can progress through each of these stages and how I did it personally. So let's go ahead, let's dive in, right? So the first stage, losing a lot, okay? The first thing you need to do is ask yourself, what type of trader do you want to be, okay? I see it all the time. People come in and they just want to copy what everyone else is doing. They want to copy what's hot, what's trending on Twitter. But that's not the way to go about it, because what someone else is doing might be working for them, right? It might be working for their lifestyle. But if you have a job and you can't scalp while you're on your 9-to-5 job, how are you going to copy those people who are scalping? How are you going to implement their strategy into yours if you can't even be at the charts for more than 30 minutes a day, right? So you need to ask yourself, what type of trader do you want to be? And then next, you want to find an edge in the market that resonates with you and your trading personality, okay? What do I mean by trading personality? Well, me personally, I know that I don't like to swing trade. It's not because I can't do it. It's just because I don't like having money on the line when I'm trying to go to bed, because I'll be sitting on my phone, scrolling on TradingView, looking at my positions, and I can't be present in the moment. I can't relax, right? So I like to get in, get out, maybe hold my trades for a few hours, and then call it a day, right? That's just me knowing myself. So you need to find an edge that resonates with you and matches your trading personality. The next thing you need to do is look at your risk management, okay? What is your R multiple that you're aiming for, right? Are you taking skewed risk reward setups where your winners are bigger than your losers? That way, you don't have to be right, 50% of the time. You can be right 25% of the time if you're taking 3-to-1 setups, right? So you need to look at your risk management, your R multiple, and then your position sizing, right? How are you sizing on your positions? Are you consistently using the same size on every trade you take? Because if not, that's why you're seeing these giant swings in your equity curve, okay? The next thing you want to look at is your daily rules. What do I mean by daily rules? Let me explain. Daily rules are kind of like your operating hours, right? So how are you coming into the charts? What time are you looking for your setups? What time are you getting off the charts and calling it a day? After how many trades are you calling it a day? For me, I'm taking 2 trades max per day. I got 2 shots in the chamber. I'm looking for my A+ setup. And if I don't see it, I don't take a trade, right? And I know that I have to be selective on the trades I take because I only got 2 shots. So that's what I mean by daily rules. Now, once you figure those out, you'll be able to kind of get to the next step, and that's losing a little bit of money, all right? Because you've kind of gotten the risk management down. You know about R multiple. Believe it or not, I didn't know what R multiple was, in my first year. I was just trading options, taking profits at certain percentages, right? I didn't even know what risk reward was, or I wasn't even thinking in terms of probabilities, right? So that's losing a lot. Now, losing a little, the first thing you need to do once you get to this step and you want to break free out of it and elevate to the break even stage is consistency. All right. It took me forever to realize this, but getting into and out of a trade should feel repetitive. Okay. You need to be systematic in your approach. So you should be entering the trades the exact same way every time, placing your stop loss in the same spot every time. You should be taking profits the same way every time. That way it becomes almost boring and you're just following the system, right? That way, if you're systematic about it, you can't deviate from it and make these discretionary mistakes where oh, I think I should do this. No, you either know what you're supposed to do because you have a system or you don't, right? It's A or B. There's no, it's just black and white. There's no in between, okay? We're dealing in terms of, ones and zeros. We're binary like a computer, right? We want to be like robots. The next thing is mindset, right? This is something I struggle with. You got to realize that small losses are a part of the process, okay? We talked about position sizing and R multiple. You're going to have losing trades. Your edge is only so sharp in the market. So you need to be able to accept small losses as a part of the game. We are operating like a business, and businesses have expenses. So you need to accept that small losses are a part of the game and they're just business expenses. So if you want to operate at this level and make that fuck you money and call your boss and say, hey, I quit, you got to be able to take a loss, because traders who can't take a loss will not profit long term, okay? You're going to get emotional and you're going to blow up. Now, the next thing you need to do, you also need to be journaling, right? If you're not journaling and tracking your performance, how can you expect to improve it? All right, there's tons of software out there. There's tons of Notion templates and Excel spreadsheets you can use. You can just Google them online. Personally, I use TradeZella. Shout out Umar. But you need to be journaling your trades. That way you can track your performance and build good habits, and then also identify mistakes that you're making. By identifying those mistakes, you're going to be able to remove those mistakes from your trading, build on good habits, and by removing those dumb trades, those dumb mistakes that you make that lose you money, by removing those losing trades, you're going to make more money because those dumb trades undo the good trades that you've already taken, right? So that's losing a little. And that's how you go from losing a little to breaking even, right? So once you're at the break even stage, you now want to refine your approach. That way you can remove things that aren't working for you. And then what most people do is they start adding stuff, right? They start adding stuff to their approach, but you want to be doing the opposite. You want to remove things from your process, from your framework, right? Because by removing things, it's going to actually dumb down your approach and simplify it in a way that makes it easier to execute. Because the more moving parts you have, the harder it is to execute consistently. You're going to suffer from that analysis paralysis that we all hate, right? You're sitting and staring at a setup, you have conflicting biases, you're waiting for all these little things to line up. And at a certain point, you just got to execute, right? And just think in terms of probabilities, because people think the more they add to their approach and the more they study and the more they learn, the less they're going to lose. But that's a complete fallacy, because everyone has losing trades and your edge is only so sharp, like I said. So it's not a matter of, losing or getting a bad grade on a test, right? Where the more you study, you get an A. But in trading, you can be taking A+ setups and they still fail on you, still wicks you out and goes in the direction you thought. So by refining your approach, right, and removing things from your system, instead of just adding and throwing a bunch of stuff in there that doesn't actually work well together, this will simplify it and make it easier to execute. The next thing, focus on quality, because quality is better than quantity, right? We all hear about it. It's super cliche, but less is more, right? Less really is more in trading, okay? Now, by focusing on quality setups versus just scalping 100 different trades a day, you're going to save yourself, one, a lot of opportunity cost, right? Because if you are scalping tons of trades, you're more likely to make a mistake executing at that frequency of trades versus if you're just taking two trades a day like I do, right? Because less is more. And so you can actually size up on those A plus setups heavier rather than sizing down and taking a bunch of little trades for a bunch of little quick dopamine hits, right? We're not here to pull the lever on the slot machine, like the grandma does at the casino. We're here to really just focus on our setup, hammer that A plus setup, and get on with our day. I don't know about you, but I didn't get into trading to sit here and stare at a screen all day. I got into trading to do the opposite of that. I got into trading to go out, enjoy my life, go to the beach, spend time with family and friends, take care of my friends and family. And that's that, right? I didn't get into this game to sit on a chart for 3, 4, 5, 6 hours a day, okay? So that's why I always like to focus on quality setups over the quantity of setups. And so you need to be studying your analytics, right? Because up here we talk about, you should start journaling your trades if you're at the losing a little stage to build good habits. Once you've developed that journal, you need to start studying those journal analytics, okay? And that will allow you to spot good and bad trends. So for example, let's say it's Monday, right? And you look at your journaling stats and you see that Mondays are your worst day. You don't make any money on Mondays. If you do, it's a little bit, but the losses far outweigh the wins on a Monday. If you see that, you should just remove Mondays altogether, right? Because that's going to save you so much money. You're going to make more money just by not trading Mondays and taking a 3-day weekend. That's something I saw, especially early on. I would come into the market and I was so excited to make money that I would come in with size, ready to make a buck. Because I didn't live for the weekend anymore. I wanted to trade. I wanted to pull that lever, at the casino slot machine. And I wanted to make some money. So I would come in all excited. I'd jump the gun and I would lose my ass, okay? That was a bad habit. That was a bad trend in my performance. And so if I wasn't journaling my trades, I wouldn't actually be able to analyze my performance and then see that bad trend, right? And then be able to make an adjustment and fix it, okay? So you need to be doing these things to go from breaking even to now making a little bit, okay? So how do we go from making a little, right, to making a lot? How do we go from making a little bit of money, I'm paying the bills, to making, fuck you, I'm out, peace, have fun with the W2, right? Well, you can, one, optimize your routine outside the charts. That way you get your life in order, okay? I see this all the time, especially with some of my friends. They want to lock in and they want to make, all this good money, but their life is such a mess outside of their work, outside of their business, outside of their trading. So if your life's a mess, you don't have any discipline outside the charts, you don't get up at the same time every day, you don't eat clean, you don't go to the gym, you have no discipline outside the charts, what makes you think you're going to come into the charts and all of a sudden flip a switch and that's going to change? It's not. I'm telling you, it's not. Okay? So you need to optimize your routine and get your life in order outside the charts first. That way, when you come into the charts, you're at peace. Okay? You're at peace and you don't have all these things weighing heavy on your mind, because trading is a mental game. All we're doing is sitting here pushing a couple buttons, right? But it's the ability to lock in and focus and block out the distractions and just focus on your process that makes it so much fun, so much, so rewarding. And by following your process to a T, the money's going to come, right? Because the money is a byproduct of that process. The money's a byproduct of skill, okay? So you need to get your life in order first before you come into the markets. If you don't, that mess, all that stuff you're carrying with you, your wife's pissing you off, your girlfriend just broke up with you, you're going to carry that into the charts with you when it's time to trade, and you're going to try and prove something to yourself or trying to prove something to other people, and that's the worst spot to be, okay? You want to be trading from a place of abundance. You want to be trading from a place of peace. The second thing you can do to go from making a little to making a lot is to begin stepping out of your comfort zone and pushing your limits. One thing that I wanted to do in 2025 was to step out of my comfort zone and start sizing up on my trades. So if you've been following me for a while, you know I would make a few hundred, a few $1,000s, and that was a good day for me. Now my risk is like 6 grand a trade, and I'm looking to make like at least 5 figures in a day, right? So that's me stepping out of my comfort zone, because I found that at the end of last year, I got so comfortable risking the same amount, risking a few $1,000s on a trade. I got so comfortable with that. It didn't really, I didn't feel anything, which is great. That's how it's supposed to be. But at a certain point, I just started making dumb decisions, because I was like, oh, it's just a few grand, And I would take dumb trades, and I wasn't stepping out of my comfort zone, and it wasn't keeping me on my toes, and keeping me sharp. And so you'll find that if you stay in your comfort zone too long, you'll start to plateau, and you could even, your performance could take a hit, like it was for me. And I started taking dumb trades, started losing money, and I did some self-reflecting, and I analyzed my performance, and I said, I've been sizing the same on these trades for like months and months and months. I need to make a change. Do I want to make fuck you money? A few $1,000s a day is fuck you money. Okay, don't get me wrong. That's enough to quit your job and do what you want. But if I want to trade like the big boys, and I want to get, take the vacations I want, take care of the people I want, have the freedom to do what I want, when I want, with who I want, and at that level, then I need to start sizing up and start stepping out of my comfort zone and progressing. Okay, so you need to push your limits, right? The thing is about trading, there's no boss. You don't have a boss. So no one's going to knock on your door or ring a bell or send you a text and say, hey, it's time for you to start sizing up, right? But you can't start sizing up until you've proven to yourself that you have a working system, okay? Don't put words in my mouth and say, Zach said full port. No, I didn't say that, okay? But you need to be incrementally, slowly stepping out of your comfort zone. And if you find yourself getting emotional over the money that you're risking, dial it back a little bit and then slowly increase it, right? Until you get comfortable. That's how you do it, okay? The last thing you got to remember, we talked about quality over quantity. You don't need more trades. You need more capital behind the good trades that you're already taking, okay? So if you're focusing on quality setups, what you want to do is you want to hammer, I don't say not full port, but you want to size up. You want to have a solid size behind those quality setups. When you see your setup, that's when your gut instinct says, okay, this is my setup. Like I'm taking the trade. I'm pushing the button, decent position size behind that trade, and I'm gonna let the probabilities play out in the long term. And that's all you can do, right? That's all you can do is follow your system when your setup appears, and that's that, right? So you don't need more trades. What you really need is more capital behind the good trades that you are already taking, all right? And by taking less trades, you'll actually reduce the opportunity or possibilities of you making a mistake, a dumb emotional mistake, or a fat finger mistake. Maybe you type in the wrong number, right? That's happened before. Click buy instead of sell, whatever. There's so many mistakes you can make in this game that if you are taking a lot of trades, the likelihood of you making a mistake goes up. So now that I've made all this money and I'm making a lot, what do I need to do to stay at the top of the mountain, right? Because I don't want to get up there and fall down. What do I need to do now that I'm making screw you money, right? Tell my boss to piss off. What do I need to do? Well, it's easy to feel invincible at the top, okay? And when there's always a bigger fish making money than you. But when I say you're at the top of the mountain, you're at your peak, right? This is what you wanted. You're making the kind of money you want. And what can I do to stay up at the top instead of sliding down? Well, you need to stay disciplined, okay? And you can't get complacent. You need to keep refining your process. If you feel like adding something in, it's just like the scientific method. Take your system, don't change anything about it. Don't change any position sizing or anything. And if you want to add something in, just add that one thing in and see how it performs with the rest. And if it decreases your performance, strip it back out. Don't add it in. If it increases it, great. See why. And then you might be able to even keep it in there, right? But you don't want to get too complex. So don't get complacent. Keep stepping out of your comfort zone like we talked about up here. And it's easy to feel invincible. So you need to keep refining, Don't get complacent. And lastly, reinvest your profits into other income streams, right? This could be real estate. This could be the long-term portfolio with stocks, bonds, crypto, right? I'm not going to sit here and debate on what the best investment is. Maybe you want to go and start another business that's not even related to trading, right? So all those things, you could even start like one of my things, I like cigars. It would be sick to start like a local cigar shop in my city, like a cigar lounge that serves like bourbon, like dark liquor, and cigars, right? Like that's a passion project that I might want to do in the future. So if you have anything like that, that's a great way to, one, give back to the community, but two, reinvest your profits. That way you don't have to rely on this skill to make money, right? We want to buy assets for the long term. That's the difference between being rich and being wealthy, okay? And you want to have something that you can pass down to your kids, your family, whatever, right? That way, if something happens to you, they're set. So it could be putting money in a trust. It could be, buying real estate, like we said. All those things are great options for once you're making that FU money, right? So lastly, if you are wanting some help with this, I have opened up one-on-one coaching with me, okay? So watch this video. It'll tell you how I can help you not only implement my mechanical trading model and work one-on-one with me. I give you my WhatsApp number. I give you access to my private one-on-one client calendar. You can book it anytime you want. But not only do you get that and learn how to actually trade the system I trade, but you also get to go back over all of these things that we talked about, right? Taking you through these stages. I know how to operate these stages because I've been through them all, right? So if you want to work one-on-one with me and need help implementing any of this into your own trading, what I want you to do is come over here, click the link in the description, and watch this video. It'll tell you how I can help you, who I can help, who I can't help, and then if you want the full details, click here and I'll send them over to you.